New Deep Dive.
Welcome to the Deep Dive. Today, we are really plunging into a stock that, well, it always seems to be making headlines, doesn't it? Tesla, ticker TSLA.
Absolutely. It's more than just cars now.
Exactly. This is a really complex mix of, cutting-edge innovations, some really volatile market trends, and maybe surprisingly for some high-stakes politics, too.
A real cocktail, as you said.
Yeah. So our mission today is to try and unpack the key factors driving Tesla's, let's call it, wild performance. We want to look at its current market standing, dive into those incredibly bold predictions for its future. We've got a stack of sources here to help us get a handle on it.
And it's a fascinating picture right now. As of today, July 10th, 2025, the stock price is sitting at $309.87 USD.
Okay.
That's actually up 4.73% from the previous close. Today alone, it swung between a high near $312 and a low around $296.
Wow, quite the daily range.
It is. And the scale we're talking about here, Tesla's current market cap is roughly $1.016 trillion USD.
$1 trillion. That number is just, it's still astonishing to hear for a car company, even one like Tesla.
Well, and if you zoom out, the long-term view is even more staggering. We're talking over 23,000% growth since its low point of just $1 back in 2010.
23,000%.
Yeah.
That's history-making growth, really.
It truly is, and you need that context. But, the recent picture is, well, more mixed. Like you said, volatility. It's up about 3.5% this past month.
We have some positive movement.
But it's also down quite a bit, 24.15% from its peak back in December 2024. That was $488.54.
Right, nearly $500. So that peak wasn't that long ago?
No. And this up and down, the short-term volatility is exactly what makes Tesla so interesting and, frankly, so debated.
So given that roller coaster, what are the real forces at play here? To understand, I guess we need to look under the hood, right? At the financials, are they solid?
That's the crucial starting point. And if we look at the Q2 2025 performance, the numbers did raise some eyebrows. Production was 410,244 vehicles.
Okay.
And deliveries were 384,122. Now, the key thing here is that this was lower than what analysts were expecting.
Yeah, a miss. How much lower?
They were looking for something closer to 463,000 deliveries. So, yeah, a noticeable miss. And importantly, this is the second quarter in a row where sales declined.
Second quarter. It does raise questions about, sustained growth, doesn't it?
It does. It prompts questions about whether the rapid growth phase is maybe slowing down.
And how does that compare to Q1? Were there similar signs then?
Yes, it follows that pattern. In Q1 2025, the earnings per share, the EPS, that came in lower than expected to. $0.27 versus the $0.42 forecast.
Okay.
Revenues were also lighter, $19.34 billion when the forecast was more like $21.4 billion.
And the reason, you mentioned margins earlier.
Right, falling automotive margins. That seems to be driven mainly by efforts to modernize factories, plus, of course, just fewer deliveries impacting efficiency and scale.
So challenges in the core car business, but
What?
wasn't there a silver lining somewhere in the financials?
There was, actually, the energy storage part of the business. That segment achieved record gross profit.
Interesting. So diversification helping a bit there.
Exactly. It helped offset some of the automotive side challenges. And, for you listening, why should you care about these numbers? They're really the bedrock. They help you understand the company's actual health beyond just the headlines and, frankly, the hype.
Speaking of hype,
Yeah.
this is where Tesla always gets really interesting. The future vision. Innovation, autonomy. They're betting big on robotaxi, aren't they?
Oh, massively. It's a huge focus. The whole autonomous vehicle development, specifically the robotaxi platform, they even started a pilot program down in Austin back in June.
Right. I remember reading about that.
And Elon Musk himself has made these really bold comparisons. He talks about it generating recurring revenue, kind of like an Airbnb model rather than just selling cars.
Moving from hardware to services, essentially.
Precisely, a software and service play.
And this vision is fueling some absolutely wild future valuations from certain analysts. Kathy Wood at ARK Invest comes to mind.
Her predictions are definitely eye-popping. ARK Invest thinks 90% of Tesla's value could come from robotaxi by 2030.
90%.
Yeah, and that, they believe, could push the stock price to $2,600 USD.
$2,600. That's, what, a 700% increase from where it is now?
Roughly, yes. A 7-fold increase. Plus, they're planning the Cybercab, that dedicated autonomous vehicle, for a 2026 launch.
Okay, 700%. That grabs attention. But how realistic is that? I mean, the technology is still pretty early stage in terms of mass deployment. How much of the current value is tied up in that future bet?
That's the multi-trillion-dollar question, isn't it? A huge amount of the current valuation is absolutely based on executing that vision. It assumes they can solve the tech hurdles, the regulatory hurdles, the scaling.
And the competition. You've got players like Waymo who've been at it for a long time.
Exactly. Waymo has significant real-world miles under its belt, and there are still major safety concerns and public acceptance questions around full autonomy. So that $2,600 target, it assumes near-flawless execution on something incredibly difficult.
It sounds like a massive risk, but obviously with a potentially massive reward baked into that optimism.
Absolutely. And the factors moving the stock aren't just tech and finance. There's this other layer, which is politics, specifically involving the Trump administration. That's become a really unexpected variable.
Yeah, this part is fascinating. The stock price seemed directly linked to Elon Musk's political moves for a while there. After Trump won in November 2024, the stock surged almost 100%, didn't it? Hit that peak near $488.
It did, and that was widely connected to Musk's public support for Trump, including reports of a massive $250 million donation to the campaign.
$250 million, wow.
But then things got tense. Disputes over budget legislation, Musk talking about maybe forming his own America Party.
Right, that seemed to cause ripples, big ones.
Huge. The stock dropped 14% in a single day back in June 2025 because of those political tensions.
14% in one day, just based on essentially political maneuvering and CEO statements. That really says something about the stock, doesn't it?
It really does. It highlights what analysts call key person risk, how much the company's value is tied to the CEO's persona and actions, even political ones. It's almost like the market started pricing in Musk's political capital, or lack thereof at times.
Which is unusual for a company this size.
Yeah.
It's not just policy risk like tariffs. It's personal political drama affecting shareholders.
And speaking of policy risk, the tariff situation is another concern. Trump's new tariffs on imports, particularly from China. Well, Tesla has a huge factory in Shanghai.
Right, Giga Shanghai. So trade wars could directly hit their costs or fails.
That's the fear for investors. Increased costs, potentially impacted sales if trade tensions escalate. It just adds another layer of uncertainty.
So it underscores that you can't analyze Tesla in a vacuum. Politics, CEO actions, they matter directly. But, okay, setting aside the politics for a moment, what about good old-fashioned competition? Who's putting pressure on them?
The pressure is definitely mounting, especially from China. Companies like BYD are expanding rapidly.
And they offer cheaper EVs, right?
Much cheaper, in many cases. And it's having an impact. Even in Europe, where Tesla has relatively lower import tariffs compared to Chinese brands, Tesla's has actually lost market share to them.
Interesting. So even with a brand advantage, the price point matters.
It certainly does, especially when combined with a broader trend we saw in 2024, a general sort of cooling off in overall EV demand compared to the explosive growth earlier.
So slower demand, more competition, that usually means price pressure.
Exactly. Tesla has had to lower prices in several markets to stay competitive, and that directly squeezes their profit margins, which we talked about earlier. So for you, the listener, this shows that even a dominant player like Tesla isn't immune. Competition is fierce, and it directly hits the bottom line.
Okay, let's shift gears again. Technical analysis. Trying to read the tea leaves and the charts and numbers. Tesla's known for volatility. Do the technicals confirm that?
Oh, absolutely. The stock's volatility is high, around 4.01%, and its beta coefficient is 1.75.
Beta. Okay, what does that mean in simple terms?
Put simply, it means the stock tends to be much more volatile than the overall market. If the S&P 500 moves 1%, Tesla, on average, tends to move about 1.75%. So bigger swings, both up and down.
Got it. Amplified moves. And what's the chart telling us right now after that big drop and rebound?
Well, after falling about 55% from that December peak near $488, it had a strong bounce off a low around $182 back in April 2025.
Okay.
Right now, at roughly $310, it's sitting in what technicians call a resistance zone. Think of it like a ceiling, somewhere between $300 and $320.
So a key level. What happens if it breaks through or fails?
If it can push decisively above $320, the thinking is it could clear the path towards $350. But if it fails to break through this resistance, we could see it fall back towards support around $270.
So a potential swing of $30, $40 either way from here, technically speaking.
Potentially. And looking at other indicators, the monthly moving averages suggest an upward trend is still generally in place. But oscillators, which measure momentum, they're more neutral right now. Add it all up, and the overall technical signal from this particular set of tools is currently rated as a strong buy.
Interesting. But as you said, it's not a crystal ball.
Definitely not. Technical analysis gives you a snapshot of market sentiment, potential price levels to watch. It's data-driven pattern recognition, essentially.
Right. So let's talk forecasts. We heard Kathy Wood's extremely bullish $2,600 target.
Mm.
What's the, let's say, average view among analysts look like, short-term and long-term?
Okay, short term, say the next 3-6 months, or looking out 12 months. The consensus among 42 analysts gives an average price target somewhere between $299 and $309.
So basically flat to slightly down from where it is right now.
Exactly, suggesting maybe a slight decrease, 0.5% to maybe 3.5% over the next year, according to the average. But, and this is key for Tesla, the range of forecasts is enormous.
I bet. What's the spread?
The highest target out there is $500, but the lowest is down at $115.
Wow, $115 to $500.
Mm-hmm.
That tells you how uncertain things are. What's the overall rating? Buy, sell, hold.
The consensus rating is neutral. It breaks down like this. 23 analysts say buy, 11 say sell, and 14 say hold. So pretty divided.
Makes sense given the volatility. What are the big risks everyone's watching in the near term?
Number one is probably the upcoming Q2 earnings report on July 23rd. That could definitely move the stock. Then you have the ongoing uncertainty about Trump's trade policies, potential tariffs.
And Musk's political activities?
And Musk's political activities and, general controversies, those remain a factor.
Any potential upsides or catalysts people are looking for?
Sure. Any really positive, concrete news about progress on the robotaxi program, especially if those Austin tests show strong results publicly, that could be a big boost. Also, longer term, the idea that lower interest rates from the Fed might eventually help boost U.S. car sales again.
Okay, so lots of moving parts short term. What about the longer view? 1, 2 years out, even further?
That's where the divergence gets really stark. You have the optimists, like Morgan Stanley, seeing potential for around 93% growth, maybe towards $600 a share, if Tesla really nails the autonomous driving and software side.
So still very bullish, contingent on execution.
Very. And then, of course, you still have AirK's $2,600 target by 2030 hanging out there almost entirely based on robotaxi dominance.
But there must be bears on the long-term view, too, besides just the short-term neutral consensus.
Oh, absolutely. Wells Fargo, for example, has an underweight rating, which is basically a sell. Their target is way down at $120.
$120. Why so pessimistic?
They cite risks like continued lower EV demand overall, that intense competition we discussed, and the pressure on margins continuing. The major long-term challenges they see are that competition from BYD, from Waymo in autonomy, potential delays with the Cybercab, and just the fundamental challenge of proving these new technologies can actually be profitable at scale.
It really is striking how wide that gap is between $126.
It is. And what stands out when you hear those numbers, it's just a powerful reminder that investing, especially in a company like Tesla, is as much about believing in a future vision as it is about today's numbers. Different analysts are clearly weighing those future bets, the political risks, the competition, very, very differently.
It really drives home the uncertainty. Okay, one last connection before we wrap up. Oil prices. Seems unrelated, but does that play a role?
It does, indirectly perhaps, but it's worth noting. We've seen oil prices falling recently. WTI crude is around $66 a barrel.
66, okay.
When gasoline is cheaper, it can potentially make electric vehicles slightly less attractive purely on immediate running costs for some consumers. The payback period might seem longer.
Right, it might dampen the purely economic argument for switching for some people in the short term.
Exactly, especially for those less motivated by environmental concerns.
But long term, the shift to EVs is still the underlying trend, right?
Absolutely. The big picture, the long-term move towards sustainable energy and electrification, that trend is still very much intact and supportive of Tesla's core mission. And don't forget their energy storage business, which, as we said, is doing well and directly benefits from that green transition. It's just another one of those interconnected factors to keep in mind.
Okay, so let's try to recap this deep dive into Tesla's wild ride. The stock is, well, highly volatile. No surprise there. It's being pulled in different directions by its recent financials, those delivery misses, margin pressures, but also pushed by these huge, potentially game-changing innovations like robotaxi.
And then you layer on the unpredictable political landscape, the CEO's outsized influence, and this really fierce growing competition in the EV market globally.
So short-term outlook, probably more volatility, especially with earnings coming up on July 23rd. Seems like the consensus is cautious for the next year or so.
Right, but the long-term outlook is where the debate rages. It's a company with undeniable, immense potential driven by technology. but it faces really significant hurdles. Success seems to hinge heavily on executing these incredibly ambitious and, let's be honest, still somewhat speculative projects.
So here's a final thought for you, our listener. Given this unique mix, the cutting-edge tech, the charismatic, sometimes controversial leader, the real-world market fights, the political drama, what does Tesla's journey really tell us about innovation itself in the 21st century? Is it purely about brilliant disruption? Or is it also a story about how powerful market forces, competition, and even unpredictable political tides can shape the destiny of even the most visionary companies? Does thinking about all these non-business factors change how you view what drives a company's success? Something to ponder.
Subscribe to New Deep Dive.